Welcome to this week's weekly video update for Market Matters. I'm Harry Watt. I'm joined by James Gerrish here today. It's the 8th of December, James. We're going to talk about performance across the portfolios for up to November. So November to start with, the best of the portfolios was the international portfolio, James. What led to that outperforming in November?
Yeah, well, we cover every month. We cover what the portfolios did the month. We're meant to do it the first video at month end. We didn't because the month finished on a Tuesday, and we did the video straight after on Wednesday, and the performance hadn't settled. So here we go. The international portfolio was the star of the month. We had a choppy month in a portfolio perspective, but the international equities portfolio was up over 8% for the month, about 8.5%. A really strong performance right across the board. When you have a monthly performance like that, all the stocks have got to be doing the heavy lifting. The currency also helps, so a weaker Aussie dollar throughout the month aided its performance, but was really happy with that performance in the international equities portfolio. And I'd stress to listeners, international equities are a very important component of a diversified portfolio. So be sure to go and check out that portfolio on the Market Matters website.
Definitely. One other portfolio that has a lot of international exposure is our ETF portfolio, James. That was a little bit weaker in the month. That fell marginally so. But what are we sort of looking for in that ETF portfolio?
So I was down 0.4 of 1%. So this is a portfolio that's an absolute return approach. So trying to make money, whatever, irrespective of what the market's doing. It captures our 10 best macro calls, almost high conviction macro calls, and articulates them through a bunch of ETFs listed in Australia and overseas. So slightly weaker month. What you want to see in that portfolio is a consistent 10% return per annum over time. We're achieving that at the moment. So it was a steady as she goes month for the ETF portfolio in that regard, Harry.
Yeah, moving more domestically, our main portfolio, the Flagship Growth Portfolio. James, how did that one go for November?
This is where the issue rose for short-term performance. That portfolio was the weakest of the bunch. It was down over 3% for the month. Put that into context, the market was down about 1.5% for the month of November. The portfolio, if I cast my mind back 12 months ago to November of 2020, the market in November of 2020 rallied 11.7%, a phenomenal market effort. That portfolio was up over 14%. So strong outperformance in a rising market. We've had a tougher period in November in 2021 for that portfolio. It's skewed towards resources and it has a reasonable tech allocation. So resources were weak in November, as was tech. So start of December, so the first week or so of December, that portfolio has bounced back really well, and its longer term performance still stacks up. So hold the course with that portfolio. Slightly weak in November, but reasonable performance over the medium term. The emerging companies portfolio was strong in November. That's your portfolio.
Yeah,
up to 1.2%.
Yeah, a bit over 2% in the month. A couple of decent calls out of there, a couple of decent wins in terms of stock specific calls. Probably one of them was EML. It had been weak leading up to it, but it had a really good November. We've made a lot of tweaks to that portfolio today, James. 5 different trades going on there. So really setting ourselves up for sort of an outlook through Christmas now for that portfolio. But yeah, very happy with that one, another 2% for that. And it's done quite well financial year to date as well, James.
Inception to date, that's up more than 30%. So the emerging companies portfolio, certainly one to go and look for on the Market Matters website. And then probably the most defensive portfolio that we've got is the active income portfolio. It combines equities with fixed income securities, hybrids, some bond funds, some corporate loan funds, etc. So again, you want to see more consistency in terms of capital as well as consistency in terms of income out of that. That was down 0.8% on the month. So that was not a hugely positive performance, I've got to say, in that portfolio, but the consistency is key. So that's continuing to track in line with our targeted returns for that portfolio, Harry. So a reasonable month, some swings and roundabouts, international strong, domestic slightly weak, but the emerging companies portfolio was
rocks and diamonds, I think you called it, James. But before I let you go, we're moving into Christmas. Market's been really choppy, particularly the last fortnight, James. Are we suspecting that's going to continue for another couple of weeks, or are we sort of starting to see that Santa rally come through?
It has been choppy, but it's been resilient overall. So you think about in the context of a new coronavirus variant. We think about the context of rising interest rates, changing, central bank policy and the like. So to me, the market's been really resilient. So, the last couple of days have been really strong. So I think that is the start of a Christmas rally. I know I don't want to get caught up on the Christmas rally, but it's got statistical significance. So it plays out more often than not. We keep an open mind, but I think, each year we go in with a bullish bias, setting our portfolios into Christmas because it works. Over time, that's a position that works. So we're maintaining that bullish bias into Christmas, Harry.
Yeah. I know I may mention we've made a few changes in the emerging companies portfolio. Anything we should be looking out for across the other portfolios, James?
Yeah, a couple of tweaks in the emerging companies portfolio, taking some profits on some stocks that have run really hard in that portfolio, averaging a few of the weaker players. So I think those slight variations in the portfolio make sense. A couple of stocks that highlight at the moment. So Metcash had a really strong result, first half result this week. Stock rallied. I really like that company. BHP, one of the things that really caught my eye with BHP, it's trading around $40. It has nearly an 8% short position built up in that stock. So there's some swings and roundabouts with what's happening with its corporate structure and the reorganisation there, so winding up with a London listing. But we've seen a huge short position build in the Australian listed entity. That'll unwind. And to me, that's a really, if you're thinking about risk and reward in a blue chip stock, I think BHP around $40 is a layup in terms of buying that stock into the back end of the year. So to me, that's just a couple of stocks that I found interesting this week, Harry.
Definitely BHP. I think that's the biggest short position it's had in its history. And when they wind that London listing up, they could double their index weighting in Australia as well. So another tailwind in terms of technical buying for BHP come the new year. But for now, that's all for this week's video update. Thanks for joining us.